the home builders. Why?
Well, look, you just mentioned it. Not a very good quarter and the stock's up. Why? Because they got decimated last year. These stocks are early cycle stocks. They're telling you that mortgage rates are going to come down in the future. So even though it wasn't a great quarter, this is why the stocks are up. So when you think broadly about the stock market in general, I just think you want to find companies that already reflect, not a great earnings season for 2023.
Well, we mentioned D.R. Horton. That actually bottomed last summer, I think, in June, and the stock's up 50% since then. Is that a decent name, or are there better names out there?
Well, yeah, I think that's a very fair point. I would look beyond the initial home builders to some of the home furnishing stocks, because don't forget, consumer discretionary as a sector was down 37% last year. Consumer sentiment, according to the University of Michigan, hit an all-time low. And I think you want to move beyond. Well, if the home builders have started to recover, maybe that means home furnishing, home apparel, anything home-related that aren't up nearly as much. Those are opportunities I would look to, especially because they fall in that consumer discretionary group.
Andrew, can I just ask, who's going to be buying these houses? There's going to be a whole generation of people locked into 3% interest rates. They're not moving anytime soon. Where does that demand come from?
Well, rents. Look at rental income. I mean, rents are sky high right now. Now, the other thing to keep in mind is, yes, housing's turned down, but because new housing starts weren't able to be completed last year because of a lack of supply, there's not this huge glut of houses already built like we saw in 2008. So I think it's a very different situation. But again, remember, you have to think about what does these stock prices reflect, and I think it's a lot of negativity right now.